everything that Powell said during the press conference and in their official statement is wrong with respect to the Fed's commitment to bring inflation back down to 2%. If the Fed really was committed to doing that, it would be increasing interest rates. It wouldn't have stopped hiking them. In fact, if the Fed really cared about inflation, it wouldn't have lowered rates to zero and kept them there as long as they did. You know, Powell mentioned that inflation is creating an economic hardship, which is true. Well, if that is the case, why did the Fed wait so long to raise interest rates? Why did the Fed deliberately allow that hardship to get worse before it took any action? In fact, when the Fed saw that inflation moved above 2%, it didn't immediately raise rates. In fact, it didn't raise rates before inflation got to 2%. The way it's saying it wants to cut rates before it gets down to 2%. See, when inflation was below 2%, the Fed was willing to give inflation a lot of slack. The Fed was reluctant to be preemptive about preventing inflation from rising above 2%. But now it's saying we don't have to wait for inflation to fall below 2%. We can start cutting rates even before it gets to 2%. Well, why didn't it have the same vigilance when inflation was below 2%? Why didn't it raise rates before it got there to make sure it didn't get above? Right? If it really cared about it, it doesn't. The Fed knows that the economy is too over leveraged for a real inflation fight. And so all it could do is have a pretend inflation fight.
Inflation data surprised everyone. The Consumer Price Index, CPI, showed no increase, staying flat, and the Producer Price Index, PPI, even declined by 0.2%. But Peter Schiff argues these numbers are just noise. He believes the Fed isn't truly committed to fighting inflation. Despite these lower than expected inflation figures, Schiff highlights that the Fed's real motive is to cut rates, not curb inflation. He points out that interest rates have never reached restrictive levels and that the Fed's actions suggest they're more interested in maintaining market perception than tackling the root problem. Schiff emphasizes that even with these seemingly positive data points, inflation is far from the Fed's 2% target. He argues that the Fed is merely pretending to fight inflation while preparing to cut rates to support an over-leveraged economy.
We had a very busy week, dominated really by the FOMC decision, and between, or on either side rather, of that decision, we had the CPI data that came out on Tuesday or Wednesday. Actually, that was Wednesday morning. That was before we got the Fed announcement that came out Wednesday afternoon. So in the morning, we got the release of the CPI, and then the day after the announcement, we got the PPI. And in fact, we got more inflation data today with the import-export prices. And all of the data was better than expected. Better meaning less. So lower inflation on the retail level, on the wholesale level, and even the import-export prices that came out today were lower than expected. Let me start with the CPI, which was a May number. And the expectation was for an increase of 0.1, which would have been a big improvement over the 0.3 that we got in April. And we ended up getting zero, so no increase at all. That was better than expected. The year-over-year increase in the CPI, which was supposed to be 3.4, came in at 3.3. The core rose 0.2, which was better than the 0.3 that was expected. And the year-over-year core, 3.4, which was better than the 3.5 that was expected, and was lower than the 3.6 from the prior month. And as soon as the numbers came out, gold shot up, the dollar sold off, and everybody was excited because this meant, okay, we have less inflation. That means the Fed can cut rates sooner. But none of this really matters. I mean, this is all a bunch of noise. It doesn't mean anything. Even if we get some better than expected data points in the near term, none of this means that inflation is going down to 2%. It's not going to come anywhere near 2%. Look, we're at 3.3, 3.4 is the year-over-year core. And even if you look at the monthly number, the 0.2% annualized is closer to 3% than 2%. But we are bouncing around the bottom of the inflation numbers. We are headed back up. What the Fed is really looking for is an excuse to do what it needs to do anyway, which is to cut interest rates. In fact, as I mentioned on the last podcast, the Canadian Central Bank, the European Central Bank, they've already cut interest rates, even though inflation remains well above their so-called 2% target. The same thing is true with the US. But I think what the Fed is trying to do is to maintain a pretense. The Fed wants to fool the markets. That's the game plan, in the thinking that they're very vigilant on inflation. So they don't want to fold quickly and cut rates. They want the markets to believe that the Fed is being extra cautious to make sure that by the time they cut rates, that they're confident that inflation is going back down to 2%, because they know they're going to cut rates, not because they've won the battle against inflation, but because they've lost. They have to concede, surrender, but they can't admit that. They need to cut rates because rates are too high for a overly leveraged economy to bear. Not just the government, which has a $35 trillion national debt, but corporate America. Is a lot of debt that U.S. corporations took out years ago that is going to be maturing and that needs to be refinanced in 2025 and 2026. And companies can't afford to refinance that debt. Banks are in a lot of trouble because of the mortgage debt that they own and the treasuries that they own. So the Federal Reserve knows that in order to keep this financial house of cards from imploding, it has to cut rates. But it can't cut rates unless it convinces the market that it's already, beaten inflation. It has to create the perception that the rate cuts are justified. And so it has to pretend that it's holding rates at a restrictive level long enough to be certain that inflation is coming down. But all of this is a ruse, because rates are not restrictive. They've never even moved into restrictive territory. I've argued this the entire time. Everything that Powell said during the press conference and in their official statement is wrong with respect to the Fed's commitment to bring inflation back down to 2%. If the Fed really was committed to doing that, it would be increasing interest rates. It wouldn't have stopped hiking them. In fact, if the Fed really cared about inflation, it wouldn't have lowered rates to zero and kept them there as long as they did. Powell mentioned that inflation is creating an economic hardship, which is true. Well, if that is the case, why did the Fed wait so long to raise interest rates? Why did the Fed deliberately allow that hardship to get worse before it took any action? In fact, when the Fed saw that inflation moved above 2%, it didn't immediately raise rates. In fact, it didn't raise rates before inflation got to 2%. The way it's saying it wants to cut rates before it gets down to 2%. See, when inflation was below 2%, the Fed was willing to give inflation a lot of slack. The Fed was reluctant to be preemptive about preventing inflation from rising above 2%. But now it's saying we don't have to wait for inflation to fall below 2%. We can start cutting rates even before it gets to 2%. Well, why didn't it have the same vigilance when inflation was below 2%? Why didn't it raise rates before it got there to make sure it didn't get above? Right? If it really cared about it, it doesn't. The Fed knows that the economy is too over leveraged for a real inflation fight. And so all it could do is have a pretend inflation fight. And now it can't cut rates until it can pretend that it's won that fight. But all of the evidence suggests that they've already lost that fight. In fact, not only did we get the better than expected inflation data that came out this week, and again, we got the PPI numbers. I want to mention those because they came out yesterday. And instead of getting a 0.1% increase in producer prices, we got a 0.2% decline. So this number actually was a bigger beat than the CPI. And on a year-over-year basis, the PPI rose just 2.2% versus expectations of 2.5%. And the core on a month-over-month basis was flat. Year over year, it was up 2.3, which was better than the 2.4 that they had expected. It was better than the 2.4 from the prior year. And in fact, the month-over-month core was supposed to rise by 0.3, right? And instead it was unchanged. So that was even better news. And so the markets would have normally really reacted to this if Powell hadn't taken the wind out of the market sails by not being overly optimistic about this data, because the markets looked at the CPI on Wednesday morning and thought, well, Powell is obviously going to acknowledge this big improvement in inflation and therefore indicate that the rate cuts can start sooner because we've now got this progress on inflation. But instead of accepting this, Powell pushed back by saying we're still not there. We still need more evidence that inflation is really coming down before we can start cutting rates. So the takeaway from the Fed's announcement was that we're going to have to wait even longer to get these rate cuts. Now, the Fed is still indicating that all the cuts are coming. We just may get more of the cuts in 2025 rather than 2024. We may only get one cut in 2024, but don't worry, rates are coming down. They just may come down a little later. And that is really what is driving the market. But again, if Powell really cared about fighting inflation, he wouldn't be signaling any rate cuts at all, because it's obvious from the data that inflation is not going to 2%, that it's more likely to head higher from here than lower because policy never got into restrictive territory. And again, I've explained that on the podcast. The way you know that interest rates were never restrictive is that credit expansion never slowed down. Debt continues to accumulate on the federal level, the government, and on an individual level. Households, corporations continue to borrow money. Leverage, right, in the system is continuing to expand. Household debt at record highs, credit card debt at record highs, corporate debt, government debt. Everybody continues to borrow and spend because interest rates never rose enough to change that, to bend the demand curve. So demand continues to accelerate. And again, even though we saw a decline in the money supply, that decline paled in comparison to the expansion that preceded it. We had this massive expansion in money supply, both before and after COVID, but in particular, during the COVID years, we really grew a money supply that had already ballooned in the preceding years. We've had a small decline, but we didn't go anywhere near where we were before COVID, let alone, before the 2008 financial crisis. So we have massive inflation already baked into this cake. We had a small decline in money supply that has already reversed. Money supply is growing again from an elevated level. And again, with record deficit spending on the federal level, inflation really has nowhere to go but up. And the Fed is ignoring all that and instead is paying attention to these ridiculous official numbers that at best represent looking into the rearview mirror and ignoring everything that should be obvious in the windshield.
That's it for today's video. Let's recap the key points we discussed. We looked at the surprising inflation data. The CPI showed no increase, and the PPI even declined. Despite this, Peter Schiff argues that the Fed isn't genuinely committed to fighting inflation. He believes their real goal is to cut rates to support an over-leveraged economy, not to achieve the 2% inflation target. Schiff warns that the Fed's actions are more about maintaining market perception than addressing the actual issue of inflation. Thank you so much for watching. If you enjoyed this video, please give it a thumbs up and share it with your friends. Don't forget to subscribe and hit the notification bell so you never miss an update. We'd love to hear your thoughts, so drop your comments below. See you in the next video.